Aloha Big Wave Trading family. Hope you're having a great weekend so far. Before we get into the new long positions, I want to make it very clear we are overbought on every index. We are nowhere near a safe zone in the market to be pushing any new long positions here. If you find yourself not fully invested here, I would wait to start swinging for the fences. You can obey my recommended asset allocation per long signal, but you must realize that the chances that new long signals start failing more than working are now going to grow greatly. Thursday and Friday, despite the market's action and the relatively decent breadth, my portfolio didn't show the same kind of internal strength and also had more big down stocks on Friday than the market did overall, it looked like. So with me being long so many leaders on the relative strength basis, I think that's a warning sign that we are overbought. Sentiment isn't right. You can read the new positions update to see how bullish the crowd is. It's not overwhelmingly bullish, but it's still bullish. And when you combine that with an overbought market, while we're still in October, which is a crash-friendly month, mini or major crashes, it's just best to exercise caution here. So if you take any new long signals, keep all of that in mind. If they start failing, it's not me. You can either take them or not take them. I know better. I'm fully invested. I have stops everywhere, multiple levels. On some stocks, I have 8 stops. On some stocks, I have 1 stop. But they're all at logical support levels. And as the stocks break through the 20, 50-day moving average, or even the 200 as a final line in the sand for anyone up big, those 8 stops could easily turn into 4, then 2, then 1, and then I'm out. So it's all a dynamic and fluid situation, so keep all of that in mind. If all these new long positions fail, I won't be shocked. Another sign that we might be too far in the tooth, the past month, my win-loss record for stocks I take long was 85% to 15% heading into Thursday. That's now starting to switch as there's been more failures the past 2 sessions, but it's a big warning flag that it's just a bit too much. So look at how far the Russell 2000 is away from its 200-day moving average. Look at the NASDAQ 100, look at the S&P 500, and look at the Dow Jones Industrial Average. Until you start to see a curl up off of any kind of sell-off, there is no safe area to buy up here. This is ridiculous, so keep all that in mind. The first new long signal is WB. I want to show you a longer term chart going all the way back to February 2016. You can see it's part of a major uptrend. You can see whenever it gets near its major moving averages, it likes to bounce. Well, on Thursday, BZUN did that pattern. I posted it as a new long position, and BZUN rallied 5.73%. Due to FAZ taking priority and me focusing on this as it was gapping up, a situation occurred that never happened before. FAZ gapped up, preventing me from taking the full size or even a good size in BZUN, so I held off since I couldn't get even remotely the size that I could even consider doable. But instead, what I should have done is let the FAZ trade go, should have canceled the order, should have bought BZUN since it was actually opening at 34.32, which was below the 34.72 high of day and the suggested long. And I should have taken BZUN and then wait for FAZ, for capital to raise just to get FAZ. It's a lesson learned. It's never happened before where a hedge takes priority over all long signals and the hedge doesn't get filled, but the longs are within a Bible position they run. So like I said, in the stock market, after almost doing this for 20 years, you still learn and adapt, and there's a new lesson learned. So with BZUN acting like that right off the 50, maybe WB will. WBA is already moving higher, so maybe WB will follow. If it doesn't, the game plan is simple. WB's 4% of my account capital is what the position should be. Limit order 180, your first cut loss right there, 98.10. Your second cut loss right there, 93.94. No questions asked. It's below 93.94. You get out. This is a bounce right off the 50-day moving average. Very, very high potential reward risk ratio. That's why WB is a new trade. RDNT, this is a perfect speculator scam. This is where it was initially found. I did more research on it. It's also can slim quality. Similar situation, nice big long uptrend, pulling back, candle over candle, bullish candle over candle. Not heavier volume, and BOP isn't confirming, but the point is that there's tight price action coming right back down to support. And if I go long here at a limit order 1135, the high of the day, since it's not extended, my first cut loss is right there 11. My very next cut loss is right there 1070. And if you want to give it room, you got the 50-day moving average to 10. You're not risking much for another potential move higher. So let's say that this stock fails I lose my 4%, no big deal. But let's say it works and it moves 90%. What kind of reward risk ratio are we looking at right there, folks? It's right around 22 to 1 reward risk ratio. I'll take that any day with this kind of setup. Now, obviously, it'd be better if it was closer to the 50-day moving average, but with it being right at the 20-day moving average and with the first cut loss level right there, it makes sense to go long RDNT. So 2% for canceling, 1% for a low price perfect speculator, 3% of the account capital into RDNT. And then there's SEDG. This stock was in my Cancelum scan initially. It's kind of like a halfway Cancelum scan. The EPS rating's down, but the earnings per share and sales growth in the most recent quarter qualifies it. And it was also in my Perfect Speculator low price scan. But it's a higher price Perfect Speculator stock, so it is of decent quality. So I would give it the full 2% asset allocation for Perfect Speculator since it's near $30 and it's definitely above 20, so that's good enough. But same thing, SEDG, tight pullback, tight consolidation, candle over candle, bullish, basically hammer. It's a full body candle pattern, pocket pivot point signal, heavier volume. The reward risk ratio's there. Look at that previous uptrend. Boom. Maybe if we can get a move from here to here, 134. Let's say all hell breaks loose and you use that final low a day, you still have 18. You're still looking at about a 20 to 1 reward risk ratio, or excuse me, a 10 to 1 reward risk ratio. And even if it's 5 to 1, you got to take it. But it's even better than that because SEDG, if you go long SEDG, going long at limit order, 29.55. It's slightly extended, so there is no chasing. You see the 20-day moving average right there? It's extended, so no chasing. So you go long 29.55. First cut loss level, 28.15. Or you could use 27.20 right here. Final cut loss level, 25.25 right here. Or you could even use 24.70 on your final half. Or you could use 4. You could use this low right here, which I think that's wrong. 28.50. You could use 28.50 here. You could use 27.20 here. Then you could use 25.25, and then you could use 24.70. 1 stop loss, 2 stop loss, 3 stop loss, 4 stop loss. That's up to you, but that's the game plan with SEDG. Then there's PETZ, P-E-T-Z. This is a Chinese IPO. Excellent earnings and sales growth. High quality, earnings per share, relative strength rating. This is Cancelum quality IPO. This is a very rare flagging tight proper IPO. I guess it's a newly issued stock. It's not really an IPO. Maybe it is. I don't know. I didn't do enough research. Go do your own research. My game plan is always price and volume action. And on that note, heavier volume, pocket pivot point signal, lots of green bop in a brand new IPO stock. Very rare. Bullish open body candles, bullish intraday tails, bullish consolidation, tight flag. With that move right here, candle over candle hammer pattern, I want to get long PETZ, 24.77. First cut loss level, 21.41. Final cut loss level, 19.49. And if you're an absolute madman, you could use the final green bop candle, 13.50. But PETZ is definitely the riskiest one. But obviously, it's got the highest potential reward because if it even does what this little move right here did, you're looking at 162% return. Very volatile name. Be careful, everyone. This is not for the faint-hearted or the weak-hearted. You got to know what you're doing. You got to start cutting losses immediately if it doesn't work. It's an overbought market. What do you expect? Then the 2 ad signals. First off, CHGG, same pattern as before, basically what SEDG was building. You got that nice big long previous uptrend, right around a 122% move. If all hell breaks loose, you risk about 6%. That's the kind of reward risk ratio I'm talking about. Candle over candle, bullish hammer candle pattern. Above average, not above average volume, but heavier volume. BOP confirming, the other oscillators are confirming very tight price action. You've got a flag ascending base here, flat base, shallow saucer base, whatever the hell you want to call it. CHGG, want to add to my long position, limit order 15.51. First cut loss levels right there, 15.13. Final cut loss levels 14.17. If you want to get crazy, you could use all the way to 13.52. It's up to you, especially if you have a limited position like me. And then the final ad signal, STZ. Very, very nice ad signal. Bullish hammer, candle, over candle, price bar, intraday reversal, very nice. Even though BOP's going the wrong way, the support is right there. So you got your first cut loss level, 205.30, and then your final cut your first cut loss, 205.30, and then your final cut loss level, a gap fill right before the gap up at 202.71. So we want to add STZ, limit order 208.56, first cut loss level 205.30, Final cut loss level 202.71.